It's about that time of day again. Welcome back to your nightly newsletter, boys and girls. Joseph James here. Tuesday evening, July 7th, 2015. Before we get into tonight's jam-packed newsletter, boy, was there enough volatility in the market for us today? We got brand new trading opportunities here across the board today. Everything just completely fell out of bed this morning, and then, whoa, not so fast. Like it's on a string. It came right back. The star of the day, though, really goes to the S&P. The S&P was the little market that could today, and you saw the newsletter last night. I mean, does it get much better than that? Hope you guys made some good money on crude, S&P, all the markets. But boy, oh boy, what a crazy session we had today. Before we jump into tonight's newsletter, though, I do want to remind you I teach all of this to our students here at schooloftrade.com. Check out the website at schooloftrade.com. We get a great free trial on there, and you can learn all about our different membership levels. Also, I want to encourage you to make sure you're watching this video on our trading blog here this afternoon. Sidewaysmarkets.com is the address. There are 3 reasons why you should be watching this video on our trading blog. First of all, you can download all the charts I'm going to be using tonight. All the charts you're going to see in tonight's video, you can download those by using the link right below the video. Free pass, upper left-hand corner. I'd love to send you a free pass. Come out and test drive our live trade room as a guest. If you're not a member of School of Trade and you'd like a free pass to our trade room to see what we're all about, follow that link in the upper left-hand corner. And then I have a mailing list for our nightly newsletter. I'd love to send you an email every evening when our nightly newsletter goes live. All I need is your name and your email address in the lower left-hand corner. Pardon my ugly mug, of course. Also, too, if you register for the newsletter list or if you grab your free pass, I'm going to send you a verification email. So make sure you check your inbox, your spam, junk folder, things like that. All I need you to do is verify your email address. That way we can send you these in the future. And don't forget those charts. Don't forget those charts. Download those right below the video. All right, I think we're ready to rock and roll here. Seatbelts fastened, helmets on. I hope you stretched before this one. Make sure you're hydrated. The little market that, well, not really so much of a little market, right? The engine that could here, all the way down, all the way back up. This is July we're talking about. I'm crossing my fingers. Please don't wake me up. I hope the whole month of July is exactly like this. We get a lot of drama happening around the world, Chinese news, kind of a lack of news out of Greece today. They kind of kicked the can a little bit further down the road. They said, next week, July 13th, I think they said early this morning. So bottom line, though, is talked about this last in the newsletter. S&P's bearish. Gave you guys a great sell zone right up here at these highs, and then another buy zone down at these lows, and just went bing, 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 right back around here. So hopefully you're able to make some money off that. If you missed last night's newsletter, definitely go back and watch it. It'll be following this video. If you're watching it on our YouTube page, it'll run right in sequence. So the S&P is bearish, right? And this is actually a really good example of what we call a range-bound market that has a bearish bias to it. This is where new traders get hung up. This is not a bullish market yet. I know that we had a run off the lows today, but you've got to look at it this way. The trend has been lower before we go sideways. Have you ever heard me say give the trend the benefit of the doubt? So what you'll see happen is you're going to see market moves lower, and then for whatever reason, we stop making lower lows, we stop making higher highs. I teach all this, by the way, in our trial. I teach all of this in much more detail inside of our intermediate course. And then we use a strategy called the breakout strategy in our advanced course. Well, bottom line is this is now your trading range, right? So there's your trading range. So what I'm going to be looking for is I'm looking for the buyers to try here. Can you guess? Once, twice, right? And sell right back down in. So I'm going to be looking for resistance areas overhead to use for this. But bottom line right now, though, is don't be confused by this recent push higher. This recent push higher is just simply profit taking, started to lows, bargain hunting from the buyers. We just have a range right now, right? So this is a bearish biased trading range. Okay, so that's what you want to remember right now. We're not quite bullish just yet. Oh, and by the way, when would we consider this a bullish market? I'm glad you asked. Once we break higher and we hold a pullback, that's when I start. Right when we can hold, that's when I call this a bullish market. Okay, it's not bullish until we can hold that pullback. Because anybody can break to the highs, right? Any market can push to the highs. Can you stay there, right? And that's the question we have right now for the S&P bulls. So E-mini S&P is bearish. We're trading sideways, which means the high percentage trades will continue to be selling. Our goal is to look for failure patterns to sell the highs and buy the lows of this trading range, and we want to stay away from the middle. So we know right now the high percentage trades are going to be selling at this high. If we do end up all the way back down again, yes, there will be buying opportunities at those lows, but just remember though, you are going to be trading counter trend at that time. So keep that in mind for all you bulls right now. What do I mean by failure patterns? Our goal is to use failure patterns to sell the highs. Well, just like I said before, I'm going to look for, for example, we have a little bit of an ABCD going on right now, right? There's your measured move up around this, we'll call that 81.5. So there's going to be some resistance areas overhead here. Honestly, it really doesn't matter where we have resistance, right? I've got resistance here, here, here. I mean, we get a lot of different resistance levels as we go higher. What you want to look for is look for this price to make the breakout. And then there are going to be a few souls out, probably more than a few, that are not going to know as much as we do here on this newsletter, right? They're not going to see the big picture. So they're going to try to buy this pullback. When they buy this pullback, that, in my way of looking at it, is the first attempt and the second attempt. Then you know where the stop's going to be, right? Imagine you were a bull and just sell right into that stop loss. Take a quick first target, tighten down that stop, remove the risk, and just hold on for your targets waiting for you below. So a very easy, and of course, with the ultimate target being down at these lows, right? But I've given you a couple juicy little areas there to use, right, for profit targets tomorrow. So selling at the highs, 3 ways to do it. The easiest money is going to be breakout, try once, try twice, whoops, and they fail. It's called the failure pattern. The next best way is going to be draw the trend line up, right? This is my 3-point reversal pattern. And then, of course, break, make sure we avoid that trend line, right? It's called the 3-point reversal. I teach that pattern in my trial. I teach that pattern in our intermediate course as well. And then what's the third way? The third way is going to be a lot more conservative. It would be where we wait for the reversal and then we start selling those rips on the way back down. Wave patterns, right? We talk about that in the trial. We talk about that inside of our intermediate course. So everything we're going to be watching for right now, buyer failures, seller reversals, or continuation patterns off those highs, that's where we're going to get the easy money. Now, what if you're a bull right now? If you're a bull right now and you're saying, oh, Joe, you're crazy, man, right? I'm a buyer here on the S&P. I don't care what you say. I've got some information that I'm going to use here to be a buyer right now. Well, perfectly fine. Look to buy at support. Just remember, though, if you're a buyer right now, be very careful buying blindly into these highs. The first time we break those highs can be really difficult. If you're going to be a buyer right now in the S&P, the most important thing to do is to make sure that you are taking a quick profit target, tighten up that stop, right, and let the rest of it run. Every trade long right now is going to be a scalp until proven otherwise. Another opportunity to be a buyer would be look for sellers to try to sell these highs and look for their failures, right? If you need more information on this stuff, come see me tomorrow morning in the trade room. We'll be watching the S&P along with this market, crude oil, live in real time. How about that crude? Boy, we should have seen a correction today off that low, but it didn't. And today was a great example where last night's newsletter were well oversold. My exact words last night were, we're expecting a correction. See, the market always has an objective. It always does. It's not just out there playing around. The market has an objective. There are real people doing real business in these markets. Not just all speculators and gamblers, right? People are doing real business. The market has an objective. Well, this morning we woke up and the objective was, well, the sellers were laughing at our objective, right? By the time we got in the United States this morning, okay, if you came in Europe, you saw a little bit of a range that started the day today, but then, boy, by the time the U.S. session opened up, it was nothing but bearish. And so we had a pretty strong idea that the objective of going higher, no, it was nowhere to be found. And usually what happens is, right, again, market always has an objective. Usually, though, if that objective fails, so in other words, if what is supposed to happen doesn't happen, usually the financial markets, they love to react in the opposite direction with extreme strength. So price was supposed to go higher. Well, supposed to, probably not the right word. But we anticipated with such strength to the downside yesterday that we're going to see some profit taking. We're going to see a correction back off those lows. And that's what we were waiting for the best sells. But then just rolled over, right? We had a great rotational day today in the trade room. Perfect example of how what really should have happened didn't happen. We had to be light on our feet, make a split, well, not a split-second decision, right? It was about 9 o'clock, 9:15 when we saw it roll over, and we said, all right, these buyers are nowhere to be found, and the sellers literally had them in a chokehold all day. If it wasn't for projecting out this channel, this is the same channel that we saw from last night's newsletter. If it wasn't for projecting out that channel, and of course, this was a measured move down, so it wasn't like we didn't know how far it would go, right? We knew, we calculated our range expansion this morning on crude, so we knew exactly where it was likely to go, and then it was just finding the ability to get into those trades on the way down. So please remember, all I can do the night before is just anticipate. I still need to see proof. And today was a great example on crude oil of how we got proof. We got proof that we were on the wrong side of the market if we were trying to be a bull here this morning on crude. Now that we have an idea of what happened today, here we are now on Tuesday evening. We've got API number coming out here. We've got inventories tomorrow. And you know what we often see ahead of inventories? We oftentimes see price move in one direction, either up or down, almost as if to get, in this case, to get the sellers in a better position to sell it short or vice versa. So let's get ready knowing that tomorrow is inventory day and knowing that we typically will move in one direction into inventories and then tend to move in the opposite direction as we see the inventory report come out. And also, don't forget, tomorrow inventory at 10:30 a.m. Eastern Time every Wednesday, unless Monday's a holiday, right, which we did have. No, it wasn't last week, actually. Last week it was a Friday holiday. So bottom line, though, is Wednesday mornings, don't forget, you got to trade around that inventory report and be very careful trading crude on Wednesdays. Wednesdays are not the day to counter trend. They're not the day to try a new strategy. They're not the day to add more position size to your trades, right? They are a day to batten down the hatches and look for those absolutely rock solid trading opportunities. Okay, so be aware, 10:30 tomorrow morning. I'll be trading it live in real time with our students in the room. So make sure you guys come out and see me if you want real-time updates on that as the news comes out tomorrow morning. Crude, just a little bit bearish here. We see a channel overshoot at that low. That's a big, big clue. Then we see buyers pushing this back towards the channel highs for a possible overshoot of the highs. Sellers should be patient for the best opportunities at the highs, while the buyers can look for the sellers to try and fail at some short-term resistance levels overhead. So we see the channel overshoot, again, just pretty much clocked the channel low here this morning. I mean, it was early. It was only about 11 o'clock in the morning. It was still a very early part of the day today. Overshoot of the channel low. This means we've got some significant, well, think of it this way. When you see a channel overshoot, you want to think of that poker table with all the chips in the middle. The sellers are fully committed. How do the sellers get back in? How do we keep selling now? They've got to take their chips. They've got to take their profit. How do you attract a seller? With higher prices. Why does price rise higher? Well, because there are buyers down here bargain hunting. Just like I said last night in the newsletter, if you're going to be a buyer right now, wait for the overextension and buy those lows. It's counter trend, but that's the best place to be a buyer. So buyers will be bargain hunting, pushing this price off these lows, and sellers will be taking profit. Basically what happens is when we see an overshoot, we expect the bargain hunting combined with the profit taking to result in the pendulum swinging all the way to the opposite side. So under normal conditions, and this week has been anything but normal, right? So keep in mind, I'm going to come in just like you will. I'll open up my trade room tomorrow morning, and I'm going to see what this personality looks like, just like we had to do today. But the reality is, though, is typically speaking, the pendulum will shift and will go all the way back up, and we should overshoot that high. So what you want to anticipate for tomorrow is a move back up to these highs. Okay, I mean, heck, we went $3 down, $3 back up. Why not again? So we'll look for this price to return where it started this week, back to $55 a barrel. That means buyers. You guys are looking for sellers to try and fail, sellers to try and fail, sellers to try and fail on the way higher. This is another example where we're in a bearish trend, but we've been so strong to the downside here that buyers should be definitely keeping an eye open as this price goes higher, hitting all these resistance areas overhead and looking for the ability to buy into their stop losses. What if you're a seller right now? Oh, and one more thing if you're a buyer. If we do go lower, we've got a great channel forming here right now. This will be a channel break, which means the late adopters will come in and try to buy this thing back up. In my opinion, though, this is really a very important area on this chart, 52s, because the way I see it is, as price goes lower, buyers are going to try to buy this area. If they fail, we're most likely going to return right back to those lows. So sellers, keep an eye on this area at 5201, 5167. You should be looking for, as a bear, the buyers to try and fail and then revisit that low. Remember, this is crude we're talking about. This thing could go anywhere tomorrow. It's inventory day. If we do see them successful, though, at this level of support, you can almost guarantee it's going to take this thing up to those channel highs. Then, as a seller, now we're looking for the buyers to try and fail so we can sell that high. So right now, sellers, stay patient. Your best trades are going to come all the way back up near these highs. If you're a buyer right now, you can be a little bit more aggressive. It's tough to say be aggressive counter trend right now, but stay patient for the sellers to try and the sellers to fail at these resistance areas overhead. We are waiting patiently, sellers, to get another shot at this channel high up here, up around 55s. Buyers, you guys can make some easy profit buying into those short-term seller stop losses as we go higher. And if we don't go higher, if we do go lower here, this area right there is going to be a big, big line in the sand. It's going to be a great spot to be a buyer on the way higher. It's also going to be a great spot to see a failure and return back to this extremely, extremely strong downtrend right now. All right? Now you know the plan here on crude. Again, inventories tomorrow are going to be at 10:30 a.m. Eastern time, so make sure you're sitting on hands after 10:15 and until about 10:40, 10:45. How about we keep going here? Let's go from that black gold to the gold, the yellow metal, this funny yellow metal, gold futures. Very easy trading right now on gold. It's been a very easy market the past few weeks here. We're bearish. We're trading inside of multiple channels. You can see multiple channels here. You get a big yellow channel, right? That longer term channel. And if I had to guess right now, I would say that's probably where we're trying to get to right now, right? So sellers are probably going to try to grind this thing down to that channel low because, of course, you know we're going to try to rotate, right? We rotate from the low up to the high, then back down to the low, right? And then back up to the high, et cetera, right? So we'll be trying to rotate here on gold. We get a little bit longer until we get down to that channel low here. We also have a short-term channel, and that short-term channel, what a great example here of rotation, right? So we rotate from the high down to the low, to the high, to the low, to the high, to the low. Can you guess where we're going to go next? Up to that high, and that's where those sellers are going to be looking for the next selling opportunities. So gold, bearish and trading inside multiple trend channels. Sellers are looking for reversals and failures at the highs and buyers should be looking for seller failures at the channel or range lows. Let's play that game. What if price goes higher? What if price goes lower? We've got some significant support levels waiting for us down at these lows. So if price goes lower, you really got to be careful being a seller. Buyers, I would definitely be interested in this area down at the lows here. How would you trade it? Seller failure. Wait for those sellers to try twice. Buy right into their stop losses. That's the best way to buy that low. Seller failure. Sellers, you don't want anything to do with that low. Yeah, it may push violently through down to that 34 extension support, but the odds are not in our favor on that trade. The odds are much more in our favor being a seller up at these highs. So as price goes higher here, I'm looking to sell this resistance area. Now, if that fails, buyers, if that fails, that's your ability now to buy right into that stop loss and send it higher. So sellers looking for opportunities at these resistance zones overhead. Buyers, you guys can get a little bit aggressive at those highs. Keep in mind, it's a much better idea to buy the low of this channel than it is to buy the high of this channel. Okay, capiche? Sound like a plan? We'll be watching this market tomorrow in our trade room live in real time, as always, on the gold. Let's wrap it up here this evening with our euro. The euro is bearish and trading at the lows of the range. Sellers have to stay real patient right now for the best trades to occur at resistance levels overhead. While the buyers, you guys, I think the buyers have the easy job right now. You're looking for trades near the lows, and you're looking for opportunities where the sellers are failing. Now remember, the euro is really slopped up. It's choppy right now because of all the hoopla happening in the eurozone right now, right? The soap opera that is Greek, right? The Greek bailout, the issue that's happening in Greece. And unless you've been living under a rock, you have no idea what I'm talking about. Check a newspaper, you'll see what I'm talking about. Bottom line though is right now, it's like a tennis match back and forth. Bulls and bears, bulls and bears. We can definitely see we're bearish right now, but we're all the way down at these lows. I think the buyers really have the easy job right now because how do we feel confident selling into this low? See, it's very difficult to feel confident selling right here. So again, let's play the game, right? What if price goes higher? What if price goes lower? Well, first of all, again, we're down around these lows right now, right? So you can see this little wedge we have going here on the euro, right? We got kind of this narrowing range here on the euro. So you'll notice we were able to poke our head below it, but boy, did that thing reverse fast. And that's going to be a lot of the personality you're going to see as this thing tries to keep poking its head lower. It's frustrating right now to be a seller, again, because you're literally trying to sell into that low. So just be careful if you're a seller right now. I think the best way to do it, though, is wait for price to go a little bit higher and then sell it knowing that you're getting up off those lows, right? So that's going to be the easy money. As this price goes higher, the seller is going to be looking for those opportunities at these resistance areas overhead. Now remember, though, I still think you bulls are going to have a little bit easier job here. Here's why. Look for seller failure at these resistance levels overhead, right? So look for seller failure at these resistance areas overhead. If we can get into a couple of those, that's going to really make your week because you're all the way at those lows, and of course, they'll try to rotate this all the way back to those highs again. Okay, so we are bearish. If you're a bull right now, look for sellers to try and fail at those resistance areas overhead. We do have a channel here, which means you're going to see these sellers try to sell these lows, and they may be successful. I'm just saying it's going to be tough. It's going to really be tough. There's going to be drama coming out of Greece this week, or tomorrow's session. I don't think we're going to hear anything more out of Greece tomorrow, right? Today was kind of a stalemate, but that doesn't seem to be stopping, right, these buyers and sellers from having a little party here down at these lows right now. If we do go lower, right, if we do go lower, buyers, that's your green light right there. If we push lower here overnight, again, you can be a seller here, but it's much lower percentage. What I would look for, though, is as we go lower, sellers try once, sellers try twice, and you can buy right into those stop losses on whatever chart time frame you're using, whatever pattern you're using, right? But look for seller failure at the lows. look for seller failure as it goes higher. And sellers, just be careful out there because you're right down at these lows right now. So take a quick profit target, tighten down that stop, and try to hold it as much as you can here if you're going to be a bear right now on the euro. All right, guys, I'll be trading this market tomorrow with you guys live in real time in our trade room, so make sure you come out and join us. That does it here for me today, guys. Don't forget, grab your free pass, download today's charts, and register for our nightly newsletter. If you'd like more information about our free trial here at schooloftrade.com, head over to our website, grab a copy of the free trial. I'm going to send you a free invitation to come out and join us in our trade room here as a guest. Also, check out our 3 levels of membership, and we always have someone standing by 24/7 to help you guys out with any questions you may have. Boy, what an exciting week it's been. I hope the entire month of July is like this. Hope you did well today. I hope you learned a little bit. I hope you earned a little bit. My name is Joseph. Be well out there. Be nice to each other. I'll see you same time, same place tomorrow. Adios, amigos. Bye for now.